Hey traders, welcome back to this week's weekly Forex forecast. Last week was a busy week with 4 interest rate decisions, but it was the Japanese inflation data that was quite surprising last week, and I want to draw your attention to in today's video and why I think Japanese yen as a theme is going to be good to the short side next week, and I'm going to be looking at Japanese yen shorts in today's video. But last week, despite the 4 interest rate decisions, we started to see Forex markets coming back to normality. For example, over the last 5 or 6 months, I personally had a period of about 20 weeks in a row where I didn't take any losing weeks. So I was green every single week, apart from 2, one I didn't trade, 1 week I didn't trade, and 1 week I was break even. But aside from that, I didn't take any losses. And then what happens is we start to see big volatility coming into the Forex markets with the tariffs, with some of the jobs data, and then we had the EU fiscal catalyst as well. So we had these big moves. And for me personally, I started to take a couple of losses. So what do? What's the plan when that happens? You scale back your trading. The message is always the same. I said to GMT members, look, I'm just going to scale back what I'm doing, let the odds kind of swing back in our favor, and then start to press again. And last week, that's exactly what happened. We started to see multiple winning trades coming back in, and that's the sign that market conditions in Forex are returning to normal, and we can get a little bit more aggressive and start to press the odds a bit more because they're swinging back in our favor. Now, if you look at euro dollar, we had this big move and we took out in the DXY, the third lower bound in hedge dash. And this means it's a 3 standard deviation move on the week relative to what markets were expecting or pricing. And I said to you at the time, when this happens, this tends to be very often a capitulation low in the dollar. And of course, euro dollar is really, we're just looking at the opposite of the DXY, right? If I was to pull up a DXY chart, you'd be looking at exactly the same thing, but just the other way around. So when we're looking here at euro dollar, we have this big move up and now we have this outside week. It does look like we are due a little bit of a pullback, but the move was so strong that at least for next week, I still favor long positions and euro longs just for next week, because I do think, we could bounce, we could fail, and then we could have another leg down. But next week, I am looking for euro long as a theme. So we do have now that kind of top and that pause in euro dollar as expected because of the massive move we had on the weekly basis. And personally speaking, I'd like to see this down below the 1.07068. And this is where I'm going to be looking for buying opportunities next week. We will look at this in a bit more detail after we've looked at the portfolio selection. Okay, so quickly looking at the portfolio selection, Euro, Pound, and Swiss franc are still the top 3. And this is still that throwover from the EU fiscal catalyst we had, where we saw all of the EU currencies basically outperforming the commodity currencies, the dollar and everything else. So I do question whether these are going to hold up, but definitely for next week, I'm still interested in buying the dip or being long in these currencies. So very simple to the upside, I'm still looking for euro longs, pound to the upside we're going to be looking at, and also Swiss franc to the upside. And to the short side, it's also fairly straightforward. So I'm going to be looking at Canadian dollar shorts, going to be looking at US dollar shorts, but probably just for next week. We'll reassess it next weekend after we've had next week and seen how the markets shake out. But I just think that we could be looking at a capitulation low in the dollar and an absolute kind of blow off top in euro dollar. But for the moment, it's still a little bit too early. So I do like US dollar shorts for next week, but that may change in subsequent weeks. And going into next week as well, Japanese yen to the short side. This is not only the 3rd best short idea in hedge dash quantitatively, but we had that deflationary print month on month out of Japan. So this is going to put some pressure on the BOJ to at least hold rates, if not start to cut them. Might be a little bit too early to talk about cutting because they're just, kind of in a rate hiking cycle. But if we start to see CPI continually coming in Japan with deflationary prints, as opposed to just being a one-off, this is going to put downward pressure on rates in Japan. And of course, this would be bearish for the Japanese yen, and it would help the dollar with that kind of potential capitulation low if we start to see the Japanese yen coming down because of soft CPI prints. So something to bear in mind for future weeks, but going into this week, we are going to be looking at EurCad to the upside, euro dollar to the upside, euro yen to the upside. I also like pound CAD to the upside, pound dollar to the upside, pound yen to the upside. And we're also going to be looking at CAD franc to the downside, US dollar franc to the downside, and franc yen to the upside in today's video. Okay, so kicking off the watch list, as always, with crude oil. Now, crude oil has been a bit of a boring market. It hasn't really done much for a while, but I am still looking for shorts only, so I can short or do nothing in this market. What I really want to see is I want to see this pushing up, taking out the 70.56. This is where we enter the sell zone, and there's a really nice prior high right here. If we can blast through and take out this high, then I'm going to start to look, especially if we can extend into it, I'm going to start to look. Are we getting the buyers running out of steam? Are they losing faith in this move? And are they pulling their positions? Because if so, that is the 1 or 2 day liquidation that I'm going to be looking to capture back inside the range next week. If we end up trading above the 72.84, very unexpected. I don't think this is going to happen. There are multiple prior highs up here, which I would be looking to the left to see if we can trade into and then start to fail. This would be the second place I could pull the trigger on a short for a 1 or 2 day liquidation. And a third and final thing, with crude oil, it's a commodity, so you do get nice breakout moves. If you start to pull back and instead you break down below the moving average and you break down with momentum, the moving average follows it, you can look for that bear flag setup into the lower bound, the profit taking target next week in crude oil at 66.01. Okay, so kicking off the Forex markets with the Euro pairs, this is my number one theme heading into next week. You can see the big move, and then we kind of topped out because it was such a big move. We got so extended relative to expectations that we started to correct and pull back. Now, I am looking to the long side in EurCad only. I cannot short this market next week. What I would like to see is I would like to see it come down and breach the 1.53951. This is where, if we start to trade into this area, I'm going to begin to look to the left. Now, the problem here is this move up was so strong that there's no real key areas of support in here. Here's one and here's another. But in the actual buy zone itself, so here's the buy zone, here's the sell zone, this becomes a profit taking zone only. And this becomes a zone where I can start to look for bullish setups. So double bottoms, inverse head and shoulders, the very basic but common and also very powerful technical analysis patterns that show up all the time in markets. So that's what I'm looking for if we can trade below the 1.53951. And what I want to do is I want to catch that reversal. Now, again, I'm not trying to pick the bottom here per se, because we're zoomed in. It looks like, you know, maybe I'm picking the bottom, but you have to take it into context, which is this. So yes, this is essentially picking the bottom in the 4-hour chart, but it's actually just simply buying the dip in line with the overall trend in the bigger picture. Because if this pushes up and I start to sell it, then we're in the realms of trying to pick a top. Because in this case, the overall market is to the upside. And if you short in this area and it doesn't work, you know, this can kickstart the next leg higher. Whereas down here, you know, any push down should be corrective because the overall market condition is to the upside. So these are the exact setups that I go through with GMT members in real time every single week. And these are the ones that we're going to be looking at in today's video as well, as always. So a breach of the 1.53951, this is where I'm going to start to look. There's nothing on the left-hand side. So in this scenario, what I like to see is I like to see price forming its own support. In other words, it comes down, it bounces in this zone, and then it attempts to trade below this support level, right? Because there's none over here. And then we start to see momentum failing, and that's where you get sellers pulling their positions, and that liquidation to the upside, that's what I'm looking to capture every single week for 1 or 2 days. Usually you get that liquidation out of 5 trading days for 1 or 2 days. And those are the exact setups I'm looking for every single week, week in, week out. It happens all the time, every single week. So that's what I'm going to be looking for. If we break down below the 1.52702, this is not expected to happen, but it does happen occasionally if you get very volatile markets. This would be the second place I could buy this market for a 1 or 2 day reversal to the upside. And the third and final thing is, if you start to make your way down and you can see we're already below the moving average. And if you get a fast market, so there's always 3 things I'm really looking for in these markets each week. If you get a fast market, and instead of taking out the lower bounds, you just break up above the moving average, that sets up an intra-week bull flag opportunity. That first pullback into the moving average, breaks it, pulls back. That sets up a really nice bull flag opportunity into the profit taking zone, which is above the 1.56449. So second euro pair is euro dollar. We looked at this earlier on in the video, but the 1.07068 is the buy zone. So this is where I'm going to be looking for potential opportunities to the upside next week. So I want to see the market come down, trade into this buy zone below the 1.07068, and then I'm going to look left, and there's nothing on the left. It's just air. Nothing but air between these 2 levels. So when you get this, markets can move. One thing you need to bear in mind, markets can move quite quickly in air pockets. So what I want to see is I want to see price forming support levels itself. I want to see it test the buy zone, attempt to rally, make a new low, and then start to struggle. And this is the kind of price action I'm looking for. Because what this tells me is that sellers are starting to lose faith. They're starting to run out of steam. And the sentiment is shifting, and what's happening is every time we hit new lows, sellers are booking profits. And then eventually, you know, those who are short down here, they end up getting stopped out, and this causes a liquidation to the upside for 1 or 2 days. It happens every single week, week in, week out, across all the different markets. So this is the exact setup I'm going to be looking for next week. If we trade below the 1.05992, I don't expect it to come down here. Very rarely do we take these out unless you've got a major catalyst. But if we do, it does allow me a second bullet in the chamber to pull the trigger on a long opportunity, whether I'm already long or not. And the third and final thing is you can look for that intra-week breakout. So a fast market where you come down, fail to take out the lower bound, and instead you get the break up through the moving average. It follows it. And you can look for that first pullback into the moving average. Sometimes it just moves sideways. And that sets up your bull flag opportunity into the upper bound at the 1.09220. And the third and final euro pair I'm going to be looking at next week at the top of my watch list is euro yen. I can either be long or do nothing, just like the other euro pairs. And what I want to see is I want to see this market come down. Now, in this market, we have a different setup. We have a really nice support level over here. So as soon as we hit this level, I look left, there's a support level here. There's also a key area of resistance here. So what I would want to see next week, I would want to see the market coming down, breaching this area, and because there's a key area of support here, this is right where I would want to see sellers starting to fail. Essentially a failed breakout, and even better if you can see an extended move into this. So instead of it just kind of chopping down, it extends down, hits this level, you can see sellers are struggling, and that is where you tend to get 1 or 2 day liquidation back inside the range as sellers begin to pull their positions. The second place I can look for a long opportunity would be down here. I don't expect it to come down here. These are just kind of backup levels. These are not expected to be taken out each week. But if we do take out the 156.56, we become extremely oversold during the week. So in the buy zone, we're oversold during the week. And below here, we're extremely oversold during the week. So that gives me a second opportunity if I want to pull the trigger on a long for 1 or 2 day liquidation, because you very often see liquidations from these levels. So from here or below here, and then once you breach this, even more likely to get a 1 or 2 day liquidation. The third and final thing then is if you get a fast market and it comes down, especially those of you who like to trade Fibonacci, etc., you get a break up, the moving average follows it, and it's that first pullback into the moving average and move away. And in this case, there's a really nice profit target because the prior high sits right in the sell zone just here. So that'd be a great profit taking target just above the 163.98 next week in any intra-week euro yen longs. Moving on to the pound pairs then, starting with pound CAD, and they have a very similar structure, although not as strong as the euro pairs. We had the big rally up, at the same time we saw the euro moving on that EU fiscal catalyst, dragging bond yields up because they're talking about huge defense spending, infrastructure spending in Germany, and the pound went with it. So coming into this week, I do favor long opportunities only. I can be long or do nothing, cannot sell this market. And to the left-hand side, again, we have a nice support level there and a nice support level there. So if we can pull back this week, enter the buy zone, and at the same time, right here, first and foremost, I'm going to be looking to see if sellers push straight through or if they start to struggle. Especially if this market extends into this low and then they start to struggle, that is a great setup for a 1 or 2 day liquidation back inside the range. If we blast straight through there and hit this level, that's the second place I'll begin to look. You know, if we go straight through and we hit it, is this where sellers are starting to struggle? If so, that's where I'm going to be looking for that 1 or 2 day liquidation. If we end up coming straight through both of them, which is unlikely, there is a prior resistance over here turning support. But if we trade below the 1.82389, as unexpected as it is, that is the second place I could pull the trigger on a long opportunity for a 1 or 2 day reversal to the upside. And the third and final thing is you can see we're already below the moving average. So if you start to come down towards the lower bound and then you get the break up with momentum, it should be obvious. It shouldn't be kind of crisscrossing. It should be a clear break and then a pullback. In that case, moving average follows it. You can look for that first pullback into the moving average and then into the 1.86966. Nice high just here for any profit taking target for any intraweek longs in pound CAD next week. Next is pound dollar. We're starting to roll over after that big move up and the big move down in the DXY. As this pulls back, I'm going to be looking for a breach of the 1.27945. This is where we enter the buy zone, where the odds start to swing in our favor for a reversal. To the left-hand side, there's no real key area of support. There is a resistance area just here, prior resistance turning support, but quite deep. It's kind of below halfway. So ideally, what I'd like to see is I'd like to see price come down and again, start to lack momentum, start to form its own double bottom, inverse head and shoulders. And in this area, that's where I'll be looking for 1 or 2 day liquidation back inside the range. If we end up, as always, below the 1.2670, although I'm not anticipating this to be the case and it's very unlikely, this would be the second place because we turn extremely oversold during the week that I could look for a 1 or 2 day liquidation and the same patterns, kind of inverse head and shoulders, double bottom. And the third and final thing, just like with the Euro pairs, if we start to trend down towards the lower bound, but instead of taking it out, you see a reversal intra-week and it's strong. It breaks back above the moving average. You're not having to squint at it. It's a clear break. And then you get the correction, that first pullback into it, sets up the potential bull flag opportunity into the 1.30435. And the final pound pair is pound yen. Now this is a market in a consolidation, so it's kind of a range trade. So what I want to see is I want to see it come down, ideally breach the 189.97, and if possible, take out this low. That would be a great place to start to look. We trade into this, especially if we extend down into it and we start to see sellers struggling. That's where I'm going to be looking for a 1 or 2 day reversal back inside the range. If we come all the way down, there is a nice support level on this area, but if we take this out, again, it would be surprising. And how could this happen? You'd need some kind of catalyst. If we started to see stocks in the US really selling off hard once again, then that could push the yen pairs to the lower bounds. You start to see that, you might want to look at the yen pairs and just kind of filter those out. But after the FOMC meeting, Powell came out and he kind of put a bit of a bottom, at least near term, under stocks. So it looks like we're due a bounce in stocks. So I don't anticipate that happening next week, but just bear in mind, if you start to see, stocks falling out of bed, then selling the Japanese yen, we could just kind of step back. But you can't second guess markets every single week. If that happens, step back from the yen pairs. But if not, which seems most likely, then I don't see why these would be coming down to the second lower bounds. The third and final thing, as always, if we start to make our way down, you can see it's kind of trending up. We've broken down below the moving average, and then you get the intra-week breakout. The moving average follows it. You get the pullback into the moving average, it hugs it, and that sets up a nice bull flag opportunity into the profit taking target to the upside next week at the 195.86. Okay, so wrapping up the Forex universe with the Swiss franc pairs before we move on to gold and silver. Now, last week we had an interest rate cut out of the Swiss National Bank. And so you might be thinking, why are we buying the Swiss franc if we've just had a cut from the Swiss National Bank? And normally, that might be something we would want to even start to look for shorts. But quantitatively, it's still holding up in hedge dash. And alongside that, with the SNB last week, we had an initial sell-off on the Swiss franc, and I know this because I shorted it just before the interest rate decision and sent the note out to members in real time, but we didn't get any follow through. We kind of got a nice sell-off and then it just kind of reversed and it basically retraced all the way back to kind of where it started before the interest rate decision. So that failure to get a follow through to the downside from the Swiss franc last week kind of tells me that despite that interest rate cut, we're still seeing it hold up. We're still seeing some inherent strength there. So coming into this week, based on those two things, quantitative data first and foremost, but also watching the reaction to the SNB and it not being as weak as you might want from an actual interest rate cut. I do think Swiss franc longs, they are on my watch list this week. So if we can get the market pulling back, in this case, into and above the 0.62129, this is the high right here that I'm going to be looking at. Prior lows sit right here as well. So you could draw a line, kind of zone it out like this. This is the kind of zone, maybe a bit higher up here, that I'm going to be looking at. Probably about this much into the sell zone next week. So we start to move up, trade into these highs specifically because these are, although these are good, I always like the price points where in the past, it pushed price lower, right? In the past, this price point pushed it higher. So yes, broken support turns resistance, but places where in the past the market got to and then sold off, those are, in my opinion, the best resistance areas to look for, and vice versa if you're looking for support. So if we can push up and take out the prior price point just here, this is where I'm going to start to look, especially if we extend into this. We get a big rally, we hit this, and then we start to see buyers booking profits. Other buyers who came in late start to pull their positions. That's where I'm going to be looking for a failed breakout to the upside for a 1 or 2 day liquidation back inside the range. If buyers manage to break all the way through, and I don't see why they would, unless there's a catalyst, but there isn't one in the calendar that we can be looking at. But this would be the second place, whether I'm short ready or not. I could potentially pull the trigger on another 1 or 2 day reversal above the 0.62718. We become extremely overbought during the week. And the third and final thing, we make our way up to the moving average. But for those of you who like to trade, Fibonacci, you get the breakdown with momentum. And usually you get one bull flag, one bear flag set up within a given week. If it materializes at all, you don't always get them. But if you do get that kind of setup, down to the 0.60951 is the profit taking target to the downside next week. Next is US dollar Swiss franc. I want to see US dollar Swiss franc pushing higher. We've got a bit of a double bottom here. And if we break here, that's confirmed. But, the target is about 1-to-1. It kind of puts the target over here somewhere. However, before we get there, there is a nice high over here. So I want to see this breaking through. I'm looking for some strength. But once we trade into the sell zone next week, which is above the 0.89167, then I'm going to begin to look for potential shorts. So I'd like to see it take out this high. Again, we've got a nice support area, but I like prior resistance areas where price hit it and then it reversed. So that's what I'm going to be looking for. I want to see it, especially if we can extend into this. We start to get double top, head and shoulders. Buyers start to lack momentum. They pull their positions. I'm looking for that 1 or 2 day liquidation back inside the range. If we blast through, for whatever reason, although it's not expected, the second place I could consider looking for a 1 or 2 day reversal would be above the 0.90014. This is where we become extremely overbought during the week. And the odds of a 1 or 2 day liquidation back inside the bigger range, which is this, are actually greatly increased from the initial range here. And the third and final thing, as always, with these, you can look for the intra-week breakout back below the moving average follows it, and then you get the pullback, that first pullback into the moving average, and that sell-off, that bear flag into, in this case, the prior low, but also the profit-taking target to the downside at 0.87473. And the final franc pair before we move on to gold and silver is franc yen. I'd like to see this coming down. We've already started to break down, and we're actually kind of flagging. Look at the setup here into the start of the week. We've actually got that breakdown, that pullback, and that flag, that bear flag into the moving average. So I'm going to be looking for price to come down, and there's multiple lows here. 1, 2, 3, 4. Anywhere in this area, I'm going to start to look at each one of these to the left as price comes into it. We hit it. Do we start to see buyers stepping up to the plate? Do we start to see sellers booking profits? And do we start to see sellers who are late to the party pulling their positions because they don't like what they're seeing here in terms of momentum fading? If so, that's where I'm going to be looking for that 1 or 2 day reversal pattern to the upside. If we end up all the way down here, again, not expected to happen, but on the off chance it does happen, this would be the second place as a backup. I'd be looking for a 1 or 2 day reversal to the upside. And the third and final thing is if we start to come down, and this bear flag kind of starts to stall, maybe it stalls at the prior lows, and then you get the reversal back in the other direction. So you get this, pulls back, fails, and then you get the reversal, moving average follows it, bull flag set up. So exactly the same, but to the other side. The profit taking target to the upside is the 171.43, but I can only be long this market next week. I cannot sell this market next week. Okay, so wrapping up the video, as always, with gold and silver. Now, because I have a bearish bias in the dollar heading into next week, that gives me a de facto bullish bias in gold and silver, because a weaker dollar is a tailwind. It helps gold and silver. It's supportive of them. Now, out of the two of them, I would prefer to be long gold, because if, for whatever reason, we get a sharp reversal in the dollar, then gold and the dollar can kind of go up at the same time, but silver will struggle. So I do like both of them either way though for long opportunities next week. I can either be long or do nothing. I'd like to see gold pull back. There's no real support area down here, but there is a nice prior resistance area. So broken resistance, turning support. If we trade below the 296.2.08, this is where I'm going to begin to look, especially if we stair step into this high, for a 1 or 2 day reversal. I'm going to look for momentum to fade, for the sellers to pull their positions. I'm going to be looking for that reversal to the upside. If we end up below the 2900.31, as unexpected as this is, and I say that every single week, and every single week we don't trade down to it, but still this would be the second place, whether I'm long already or not, that I could look for a 1 or 2 day liquidation back inside the bigger range. And the third and final thing is we're already below the moving average, so we start to make our way down. You can look for that kind of bull flag breakout setup. So this is a bull flag with a breakout, and then you get a mini bull flag into the moving average. You can look for that into the profit taking target, which is the 3085.61. And finally, silver. I would like to see silver coming down below the 31.86 before I start to really look at it. There's a nice area of support right here, and there's one right here, but this one here primarily I would be looking to see, can silver sell off, especially if we get a pop higher in the dollar and you get an extension, you see a strong sell off into this low. That's good because, you know, if you're looking for a support level, it's much easier to break a support level if you get a consolidation just before it. You can see it break quite strongly. But if you extend down into a support level, very often it kind of makes it much more difficult to break through. So I'd like to see that. I'd like to see momentum fading below this low here. I'd like to see sellers pulling their position for that 1 or 2 day liquidation. If we end up below the 30.69, something very significant has happened, because this would be a major trend reversal. Don't expect it to happen, but it would be the second place, regardless, that I could pull the trigger on a long opportunity to the upside for a 1 or 2 day liquidation. And the third and final thing, again, looking for that breakout intra-week. So you start to come down. I'm looking for it to test the lower bound, but then reactively, it starts to break like this, and you get strong momentum. The moving average follows it, and it starts to hug it. That's where reactively you can look for that bull flag setup into the prior high and the profit taking zone, 34.20. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.